Dear guests, please take your seats as we prepare to begin our next session. We're now moving on to the panel discussion that will focus on the liquidity landscape from an Asian perspective. It's my pleasure to introduce Mohammad Isbeer, Chief Institutional Officer at Equiti, who will moderate this discussion and introduce our panels of experts. Mohammad, it's great to have you on stage with us. The floor is yours.
Thank you so much. Is this working? Oh, all good. Thank you everybody for attending. I hope this panel would be helpful for all of you. We're going to be discussing mainly liquidity, which is one of the major topics of this event as a B2B event. I would like to give everyone from the panelists about 30 seconds to introduce yourself and introduce your company, and then we can start diving into the questions. And we'll leave questions for the audience towards the end. So if you have any questions, please write them down, and we'll leave maybe 5 minutes till the end the questions. Please.
First of all, it's nice to see everyone in the other side of the world. Mohammed, thank you for organizing this. Should be a very nice and pleasant, I think, panel between the gentlemen. I am Andreas Kapsos. I'm the CEO of Match Prime Liquidity, regulated by SISEC broker, and I'm happy to be here.
Hello everyone, my name is Michal. I'm representing Ex-Open Hub. Ex-Open Hub is an institutional arm of the XTB group. We are more than 20 years on the market. We are providing technology and liquidity solutions for our institutional clients.
Hi everyone, good afternoon. Thank you for having me here. It's a pleasure to be here with the gentlemen. It's a pleasure to have you all here. My name is Andreas. I'm in charge of business development at B2 Broker. We're a liquidity and technology provider. So pretty much all of us are doing same, and that is why this may be very, very helpful, and a lot of insights are coming, I presume, during this panel.
All right, thank you everyone. Let's start with the first topic of today. Is we've been attending these events. It's happening maybe 3-4 times a year. Every time we're seeing a new a prime or like a liquidity provider, or what they call Connect. Everybody uses a different name, popping up new. And my question is, why do you think there's always a new player in the market? Is the space big enough? Is there enough flow for everyone to go around? Why is it? Is it a lucrative business model maybe from a certain perspective? What's your take on this? Why do we always see new coming brokers in the market on the liquidity side?
Well, if it's okay, I'll take this question first. I think everything goes down to the most important, I think it's down to the traders. I mean, at the end of the day, we all know that traders become a bit more experienced now, a bit more educated about the product and everything. So the demand increases then, and then the brokers obviously see this and they have a need to even hedge more. So I think one of the main reasons is this. The traders are not like before. They're more aware of what they need. They're more aware of their needs, specific needs. So that creates a more, let's say, specific demand on their end. Therefore, the demand is there. The supply also needs to be also there. So one of the reasons is that.
Michael?
Yeah, also it depends on the geographical region, I would say. There are certain regions with certain demand. There are companies that are trying to also cover certain demands of certain clients. They are focusing on sometimes on certain group of the instruments. Of course, when we've got those crypto rights, basically there was many of the new players, newcomers that were trying to cover that field. Right now, of course, everyone is looking for a decent gold liquidity. I see that some companies are trying to focus and trying to cover those needs. I think everyone is looking for a space on the market for themselves. Therefore, that's why there are always a newcomers, yes? And sometimes when there are new companies being set up, they also try to focus on a very high customer level of the customer service, plus very individual approach. As, for example, bigger companies are growing and growing, they sometimes may miss those things, and they're trying to be more, they're trying to present and deliver the dedicated customer service and and the products that are cut to the needs of certain clients.
Andrew, do you have anything to add?
Yeah, definitely. As mentioned before, everyone is looking for a space, right? The question is whether there would be enough space for such many players or not, and that's the issue. However, it's absolutely obvious that all of the newcomers and all of the brokers especially who's becoming liquidity providers, that's diversification first of all, and it's another source of revenue, another tool of generating profit, which is absolutely fine. The thing is, whether this, it's already very competitive, let's be honest. Yeah. It's too much competitive to say that there, like, anyone can become. Yeah, there should be something which is coming along with your offering, such as niche offering, unique technology advantage, or something that brings more value, more utility to your offering. As soon as that would be the case, yeah, the success may be there. It's not an issue.
Just before you give us your input in this, I hold something that Michael said about the crypto. For example, the crypto it's a great example because a lot of like LPs, they might even put all of their focus on crypto liquidity, which is something new. And at the same time, you have the trend, which a lot of brokers, as you guys know very well, they tend to have more than 2-3 LPs. So again, it creates the need for more LPs in the space.
Yeah. I mean, I completely agree with all the points, but maybe one of the things I also would like to know is the profitability of that business, and as opposed to the being a retail broker, and a lot of retail brokers now are also diving into that space. We all know that institutional flow is a bit more challenging, but maybe it needs also less of headcount to kind of run. So from a profitability perspective, do you guys think that this type of business, the prime of prime or the connect business, is it going to be profitable with all these new brokers joining in? Is there enough meat in that market for all of us to kind of make decent money? Anyone would?
I couldn't agree more. I mean, we do see a lot of B2C which are trying to get into the space of B2B. There's two ways to see this. One side of the coin will be a lot of retail clients, though, they will not like the fact that they're trading with also someone who's doing B2C and B2B. On the other side, yeah, it's possible for a broker to also take some institutional flow. It's fine. Now, in terms of profitability, obviously, when you have major players, it's more challenging, it's more saturated, it's more competitive, and that's why there's a cycle. And obviously, the companies which run their book correctly, which is the number one thing, obviously, they will have a longer, let's say, life cycle and success in the business. This comes down to expertise, which I'm not. It's very not. I mean, I'm not shy to say that expertise is excellent. There's a lot of good people in the market, so I assume time will show. There will be consolidations, in my perspective. I will analyze a bit more on later on what my personal opinion is, but this consolidation will show the ones that they're doing that they're approaching what you just said the right way.
Yeah, absolutely agree with you, Andreas, that you mentioned that there is about expertise. Yes, it is. And it's also about setting the correct expectation. So that's the thing. As long there would be as many players as possible, you know that all of the newcomers, they sometimes tend to be a bit promising in the offering which we're giving. And as soon as it would be met, as soon as it would be what was exactly expected, yeah, profitability is just a matter of time. And anyway, all of the flow is still circulating, and it's all somehow there is interconnection. And so yeah, I believe, yeah.
For the newcomers, of course, it would be challenging, I would say, to build a portfolio of the clients first, yes, and it depends about the background of the newcomer, whether they are running, for example, the existing brokerage house, whether, and of course the business model that they are running, whether they would like to, match that flow with their current order books. So they've got different way of approach to the risk management. Therefore, for the newcomers, I would say, building a base and the portfolio of the client would be the most challenging, and of course, building the name and the trustworthy on the market. That's the most challenging thing, and that's why maybe we see some players coming and going, yes, because they cannot, build that level and number of the users that are basically will create their living, yeah, will make their living, yeah.
Yeah. We discussed something yesterday about limits and everything, which is something that we cannot hear. Once a broker or an LP reach the level that we all want, I mean, it can even get benefited for us. It can be an advantage because there can be synergies between really good LPs. So and you can optimize and manage your risk like that. So if you set a limit which is outside of your book, for example, we would be more than happy to have synergies with other LPs and do the best for our company rather than being exposed. So the LPs that reach that limit that we want, which are, in my perspective, they're not a lot, they will get benefited from it.
Yeah, I couldn't agree more. Thank you, Andreas. I think, also which leads me to kind of my next question. I mean, if you're looking at the quarterly reports from Finance Magnates, we see, although the volatility hasn't been great in the last couple of years, but we still see a major increase in retail flow numbers, and this is another reason probably why these new shops are popping up. So, like Andreas, you said, there isn't enough limits in the market. So, the more LP might be a beneficial thing. Specifically, the demand mainly on gold, and we'll get to that later. But overall, there's an increase in demand from the retail market. I think there's a lot of new investors coming into the market with the crypto waves, with the NFT waves. We've seen a big influx of new traders. But do you expect this trend to continue in terms of retail flows growing? And more people coming into the space and investing into FX and CFDs?
I think when the volatility on the market in general is coming, basically there are always an interest from the market and especially from the retail part of the business. And nowadays the volatility, of course, started to grow. We've seen the volatility index like skyrocketed. Of course, right now the situation came back to normal, but still there are many of the factors on the market that they may bring that volatility. Yeah, we've got tensions in the Middle East, of course, still war going on between Russia and Ukraine, Taiwan. We've got still some results being reported from US blue chip companies. We heard the problems of Intel, of Boeing. So there are many things and factors that can bring severe volatility very shortly, yes. So we can name a couple of them, and that can easily, and of course that volatility will bring the retail users to the market. So I think still the interest will be there very shortly.
Yeah.
Just one, in my perspective also, I would go down to fundamentals and I would say that the entry barriers now to enter the retail space, it's much easier, especially on the offshore side.
Yeah.
Back in the day, the technology was so much expensive, whereas now the costs went down to enter. So a lot of investors, UBOs, are giving it a go with small investment rather than before. So I don't know if Andrew can confirm that, but for example, on our side, on the match trade side, which is the tech side, we noticed that we have, the last 2 years, we have the more startups than ever. So that shows, that concurs what you just mentioned, actually. And this also is a major factor why more retail brokers are having a go at it, Yeah.
Yeah, I can confirm that there is, but the quality of the client in general, the quality of those startups, the awareness and the knowledge of the one who's running or launching this business is increasing. And this is what brings us to the question of why there are so many new players and why there are so many because of the volatility. So the one thing drives another, and especially when it's US elections are coming, especially with all of those geopolitical events are happening, definitely the more players would be. And yeah, of course, I guess as you all may know it way better even, that volatility is the key.
And we cannot avoid mentioning the props as well, which it's something new, so it market affects
as well
for
to the
sure.
Market
Yes.
as well. I believe also maybe there's a lot of new platforms, the gamification starting to kind of happen also in our industry, which will attract more of the younger generation into the space. Okay, yeah, that's cool. I mean, like we said, gold has been the kind of the major driver of all of this. The volatility mainly is coming on gold, a little bit of the indices as well, but gold has been, I would say, maybe 50% of that kind of growth in volumes globally. It's still challenging. Liquidity on gold is challenging. There's a lot of changes, since Credit Suisse pulled out of the space, there hasn't been anyone to kind of fill that gap properly, while the demand is increasing day by day. At the same time, there are some unrealistic expectations of, gold execution, gold limits, and so on and so forth. How do you guys see this today, especially now that we're speaking in Asia, and we see a lot of the challenging flow actually coming from this side of the world, and I'm sure in all of your respected companies you have seen this. How do you see the growth, and how do you see kind of the direction in gold liquidity? How do we improve that? How do we connect to underlying clients and kind of make sure that the liquidity and the demand is aligned and there's enough to fill that demand in the market? Michael,
yeah. So first of all, I would say, of course, the demand for gold is huge, especially among the Asian market, and I think sometimes there are a lot of problems with delivering that certain products to those clients, and I think this is because of unrealistic expectations. Yes, that the clients in Asia with huge portfolios, they would like to trade a lot, and when there's not enough of the institutional liquidity, even on the spot market. Yes, we know that the prices might be manipulated overnight as well. So still, the brokers have to be aware of that, and basically there should be always an open conversation between liquidity provider and the broker, and to explain what's realistic in terms of delivering by the LP and what the flow should be expected from the broker. So the communication is a key here, and still like the things cannot be overpromised from the liquidity provider side, because they might be, like, at the end of the day, huge disappointment from both sides.
Yeah, I couldn't agree more. Communication here is very important, because at the end of the day, this competition might turn against us, and I can give a very good example from UAE, for example, that where we have a lot of Indian liquidity providers that they're pretty much giving quite aggressive conditions, and this, in the short term, it might benefit them, but by the long term, obviously, it's damaging, I believe, themselves and then the market as well. So going back to what Michael said, well, yeah, without a doubt, gold has the biggest demand right now. It's a trend, but at the same time, we need to be very careful as liquidity providers to be sure that we're covering the needs of the client, but at the same time, be within the market and logical conditions, because this will definitely backfire on most of them. And that's where, again, expertise needs to be in play.
Andrew, do you have
Can't add more, unfortunately, but yeah, it's a long-term managed expectation, absolutely.
Okay. I would like to spend a little bit more time on this, because I think this is one of the main things that are happening nowadays. And how do you deal, maybe my next question is, how do we deal with the kind of the challenging or the toxic flow that comes? It's not only Asia, but it's more in Asia than anywhere else. There's different brokers have different ways to approach this. You have different liquidity feeds that you can put in. Some of the brokers might actually bust some of these trades. Maybe it's something to kind of share with the audience. What's your view on how to deal with these challenging flows? Because these people pretty much know what they're doing. You as a broker, maybe you have a responsibility to kind of manage that in a way to kind of, how do you say, deter these activities. So where do you see the responsibility falls? I guess that's my question. Where do you think the responsibility falls here?
The responsibility falls, in my perspective, I think the number one thing here is the communication between the LP and the brokers itself. The brokers know the client. So at the end of the day, you need to advise, consult the broker, the retail broker, how to handle that flow. Our job is to analyze, bring facts to our client, make sure we're transparent, make them understand, because many times they will not understand on their side because they want to obviously satisfy their client. But then we need to understand, communicate the right way, give them everything, the analysis that we've done clearly, so they can be able to go and communicate that with the client. There are occasions where the broker finds it difficult to understand and communicate that. And there are many times that they ask us to do it on their behalf. Obviously, we would be more than happy to do it, but at the same time, if someone is abusing, if someone is doing something out of the ordinary, he's not going to take it the right way. So if we need to tackle that the right way, we need to act the same in order to make sure that the unwanted flow that damages everyone is not around our books.
On our side, as Andreas has mentioned, basically the communication is also the key here. We've got a couple of the business model to work with our clients, with our brokers that are dealing with us, and we are trying to be quite open in terms of the communication with them, and we are asking about the certain flow and how the flow looks like. Yeah, if we get the proper information, we know how to manage that flow on the books, or either, of course, to hedge it directly on the market, but you have to understand, and the client, the broker, have to understand that, you know, hedging the flow on the market, it's totally different. The costs are totally different. So we have to be very open with the communication here and still be aware of the pricing. What would be the real cost of hedging those positions? And sometimes, if there are certain schemes that the clients of the broker trying to use, like over the price, or basically place first the orders with the market maker, like later on try to move the market in the certain hours. So basically, if you put those orders hedge on the market, that strategy won't work. So still, the communication is the key here to make sure that the broker will not hurt himself or basically his own clients. Yes. So if he's open, I think the solution might be found, or basically we can spot it from the very beginning that there's no mutual business to be done here. But still, the communication is the key here.
You want to add anything, Andrew?
I definitely can add something. Transparency is the key, of course.
Yeah.
But however, I would also like to maybe mention one thing, that within the past couple of years, let's say 3 or 5 years, a lot of tools to monitor and maintain, like the monitor of the toxic flow, they have adjusted and improved a lot, like a lot. It was never like in 2019, for instance,
right.
Not like today. So.
Very good point, actually, and this is kind of like was my view on things is that, you know, sometimes when you speak to the retail brokers, I mean, there's different levels, obviously, but their understanding of the markouts and the decay analysis is quite, to a lot of extent, is still primitive. And I think maybe investment in that technology, investment in that education piece, maybe is quite helpful as well. What do you guys think? And what do you, Andreas, you see it.
Primitive is a nice word, I would say, and sometimes it's difficult to explain them what we found. Because as Andrew said, yeah, we do have obviously the infrastructure and the systems for us to identify it early. And going back to what you said, sometimes when they share with us the statements before they send the flow, the statement looks fine. And then as soon as they're live, you see something completely different. So as soon as you spot it, and then you have to communicate it, and let's say all of these factors are being ticked by us, then it's what you said. Whether they have the understanding what we're trying to do. We don't want to harm, obviously, the broker. There are clients. We want the business to come in. But they need to understand what we're trying to do here. Because there's no way they will find these conditions, as Michael said, while trying to hedge. It's a completely different ballgame when it comes to institutional.
Yes, and the technology, of course, is a different layer and a different point. It's the next step when the cooperation is already on. Yes, we can easily communicate with the client. Yeah, the certain trades, certain clients seems to be basically sending the toxic flow. But first, I was talking about the first step, that communication, as Andreas also mentioned, is the key still here, yeah? And the understanding of the market, of course, yeah?
And also another thing which is also very important is the diversification of the flow. I mean, if someone is sending you gold, obviously, it's more likely that you'll spot something. So that's something none of us like, obviously. So yeah, again, communication. You need to...
Diversification is key now, I think. We're all trying as much as possible to diversify. And unfortunately, still the demand on gold is more than 50%, and we try as much as possible. But all right, sounds. I think we've covered enough on the gold liquidity, which is an important topic. But I think gold plus everything else. What do we see as new trends from bank and non-bank liquidity providers in terms of new trends in the market? Payment for order flow was pretty much banned in the last couple of years, or not 100%, but it's kind of frowned upon now. What do you see as new trends that are coming in the market, whether on gold or on different asset classes from liquidity providers?
From our perspective, we get more and more inquiries in regards to the fractional shares because the clients would like to be their own, to build their own saving portfolios and automated saving systems that like backed up with the recurring payments. that from the, let's say, from the each month, from the credit card, a certain amount is being taken and later on automatically invested in certain portfolio created by the, either by the user himself or some recommended portfolios. Therefore, I would say that still the vast portfolio of offering in terms of stocks, it can be also synthetic stocks, because in our case we offer both, but many of the users, and they are very often not familiar with that cannot meet the requirements of, for example, custodians. Either they are from the region of the world that real shares might not be might not be provided for them, or basically they lack some requirements, or basically they lack the technology, or they are not familiar with the costs connected with the custodian. That's why, for example, we introduced those synthetic stocks, which are much more cost effective, but still they are reflecting real conditions on the market. The corporate actions are applied, plus of course the stocks are being bought, but in the name of, for example, ours, or on the name of the broker itself, but the rights are not being transferred to the end user. So I think that at least in Europe, but still we see the similar trade in South America. In Asia, still the stocks are not so very popular. Here, the culture is a bit different. I would expect that next turning point it might be in Africa, when the market grows there. Maybe the saving instruments become more and more popular. But I would say those savings, automated savings, and recurring payments portfolios might be the next maybe not game changer, but the next step of the development of the brokerage houses.
And it helps with the diversification that you were just talking about.
Exactly.
As well. Andreas, yeah.
Yeah, it's true. But I would say that we do have quite a lot of requests on the share side, although there is not too much liquidity on it. It's more for a marketing perspective, and we get it a lot, as Mike said, from South Africa, and we are able to provide some of these shares for them to offer to their clients, although we don't see flow from them. It's mainly for marketing reasons. But what undoubtedly is the number one new thing for us is the cryptos. And we currently offer 48 crypto CFDs, which are basically something that people keep asking. And we had to work on them. And very lately, we improved our offer. And we even released like an article now about it. And we've seen some reaction and some interest from the people, although they knew that we already had it. I mean, we see, especially from this side of the world as well. And our focus now will be the next, let's say, 3-4 months to see what will be the reaction and results on crypto, and whether it's going to turn out to be like shares or they will actually trade it. My assumption would be that the big five, let's say, will have some flow, whereas the other ones will be mainly for marketing reasons.
Andrew? Yeah.
In addition to the major effects, as Andreas mentioned, yeah, crypto CFD is doing a lot of job and a lot of increase. And as you mentioned, as of this moment of time, we have around 150, I guess, but still the clients are requesting more and more and more and more and more. Why? It's absolutely obvious, because they are moving their clients from Binance or from any perpetual trading towards crypto CFDs, and they are all expecting this to be in place. So yeah, niche products, advanced crypto CFD offering. I presume this would be the next trend, hopefully, these upcoming months or years.
Yeah, very good points, and I think these are all the kind of upcoming trends that we see from an asset class perspective. Do you guys have anything to say maybe on a pricing perspective? We've seen a lot of changes in, for example, on pricing on gold. So a lot of brokers are coming up with their own pricing engines, SKUs. I don't know if there's something that you want to add on this side as well, and is that something also, because we've got a lot of. We said Credit Suisse have kind of withdrew from the gold space, and that left kind of a big space, a big gap. But I see now that maybe some of the non-bank LPs are trying to dive into that with specific pricing on gold. Some of them are coming in with fixed rates, some of them are coming with variable rates, SKUs that is different. Do you guys see any changes in liquidity from that side? Technology, pricing engines, etc. that you're... Or we can move on to something else. I don't know if you guys...
I will go down to the fixed and the variable spread, because obviously it comes to us many times.
Yeah.
I don't know if you guys get it quite more in UAE, but we obviously try to tailor-make. We try to offer the client what they want. But at the end of the day, you have to offer something which is competitive and you can manage yourself. So from our side, it's very unlikely that we will offer fixed spread on gold, especially this time of the volatility. And but yeah, we would mainly analyze, and then we'll see what the request is, and then we'll just tailor-made and offer it.
Okay, sounds good. Yeah, Andrew.
Yeah, please.
Yeah, sorry. It's a lot to do, as Andreas mentioned, with the bespoke solution, but those bespoke solution in regards to the, well, it really depends on the business model that you're running. If you're doing STP flow and you're somehow dependent on your LPs only, that's one thing. If you're taking some risk and whatsoever, that's another absolutely thing. Yeah, there would be a proper balance between bespoke solution, aggressive offering, and maintain the full control over the exposure for the LP itself or for the entity itself.
Agreed.
In my opinion.
I think the market, though, realized as well. So you don't see those requests that often like we used to.
True. I agree. I feel like it's resurfacing a bit now, but like you said, it's kind of, it comes and goes in waves. And
I would like to add a few words about the pricing for equities, yes, which was always very challenging because individual exchanges has their own individual pricing. Of course, there was later on the BATS, which of course changed to CBOE. They're offering alternative pricing, which is a bit better, but still still expensive. But we see some other new commerce on the market that are trying to find the space for themselves. Plus, there's, for example, IX, that is the exchange that is offering those prices almost free of charge. So we see also the companies that are aggregating those prices and might be also entering the space of the let's say CFD brokers to fill out such space to provide such pricing for the clients, because we see that the clients, the brokers itself, they're more and more familiar with the market data pricing, which in the past was like completely out of their space. Right now they understand it that in many cases, for example, cash products might be free of charge, but when you would like to get future-based products, most probably it will come with some charges directly from the exchanges or the alternative exchanges, for example. So this is in case of the pricing, yes?
Sounds good. Yeah, maybe I just want to maybe dive into something else. I think last expo, I think, was in Cyprus. We've discussed also what should a broker look in a liquidity provider. What are the things? What are the elements that we should be looking at for a retail broker to kind of choose their right liquidity provider in terms of liquidity, maybe credit facility? We talked about like the kind of the value of the balance sheet and how we, us as liquidity providers, we leverage our sheets, balance sheets, and give that to the retail brokers. I would like to expand a little bit on that, maybe give a little bit to the audience here in Asia to kind of, and also the other part of the question that I want to look at, what are you as a liquidity provider would be looking into a client? What are the type of clients that you're trying to avoid? What kind of due diligence, not from a compliance perspective, but from like a flow perspective, from checking, all the metrics that, this is a client that I would like to have. What type of things that you guys are looking at? Maybe we'll give some information to the audience.
So on our side, as Open Hub XTB, we can only deal with the regulated entities with reputable jurisdiction, of course. As ourselves, we are regulated by more than seven regulators across the globe. Recently, we acquired the Indonesian regulations. We are starting our business in Brazil. So first of all, being compliant and having the partners that are fully compliant is the first thing. Second of all, of course, we are looking at the size of the company, because in many cases our clients are asking about some transactional limits or credit limits, which we can of course do unless we check the financials of the counterparty. We are also listed on the Warsaw Stock Exchange, therefore our financials can be easily checked. So this is quite the advantage that we have, that the financials can be easily accessed and be checked and verified by the client. Yes, we've got also a very stable and vast data warehouse, connectivity, we are easily cross-connected between Europe, Americas, and Asia using Equinix data centers. So also our clients are looking at that, whether and how fast they can integrate, and they're managing all the latency, etc., etc. So I would say there are several layers that shall be checked both by the broker and by the LPs. So regulatory, technology, and later connectivity, of course, trust, and the experience in the field of the running brokerage houses or LPs, of course.
Yeah, Mike pretty much sum it up. I'll try to do it, as you said, from the other side. I'll try to put myself on the brokers, on the retail brokers' seat. I would basically, because they're sitting on a good chair, because they have a lot of options, as we said before. So what I would do, I'll be a bit strict on what I expect from them. All of the things that Michael said, technology, the product, I would also add support. It's very important nowadays. Obviously, you can ask for financial statements from the LP to see how good their balance sheets are, their debt is. You can ask for a report on issues, how many times a year they were down. They should be able to disclose that, so you can see who are you collaborating with. In addition, for me, a very important thing is testing as well. You might have the opportunity to ask them to connect you for a certain amount of time, so you can check yourself. You have your people checking. We tend to do that a lot. I mean, we recommend our potential clients and leads to have like a certain amount of period where they can check and analyze our product, give us feedback even if they don't onboard eventually. The feedback you get is priceless because you know where you're behind. So if I had to do it from the other side, I would probably analyze all of that. Now from my side, again, I would focus a bit more, not a bit more, I would say I'll emphasize it for AML as well, which is very important right now. We're pretty enhanced in that sense. It's very important to know who you're bringing to your house. And we've seen a lot lately. So although we are regulated by 5 different regulations as well, it's very important to know. So everything else Michael said, so.
Yep. Andrew?
Yep, definitely, a lot was said, and I'm the last again. But to sum it up slightly, I presume we can call it as a kind of the flexibility and adaptability. If the broker choosing a liquidity provider, what really needs for them to be in place is how flexible the provider can be aligned with what they're seeking for. Whether it's a technology stack, whether it's flexibility in jurisdictions, depends on how many jurisdictions they may have. They may be multi-regulated. So I would say really important to measure, really important to know in choosing the liquidity provider. Of course, apart from the credibility, way of execution, business model that was previously mentioned, not to repeat again and again and again the same flow, ability to be flexible and to give to the actual client what exactly they need. Do not create a wheel or do not create the complexities for them. So do not limit them in the ways how this liquidity can be distributed. Do not limit them in the ways what they can do and cannot do. Just provide them with more option. I'm not saying not to be compliant, don't get me wrong, or just violate any kind of ML rules. No, of course not. But if we may all know brokers, it's I presume maybe no longer the time when the broker has only one jurisdiction, and they need to cater their business to all of the clients globally, worldwide, with a worldwide expansion. And that is why the providers should somehow be assistive and try to improve the business of the client, and by improvement, there is a growth for both ends. It's a win-win always.
We can't even ignore the fact that we haven't mentioned, I don't know why we didn't mention it, it's the fact that on the offshore side, we have a big trend with the crypto deposits, which are pretty much dominating now, and it gives the ability for brokers, retail brokers, to deposit on their hedge accounts very quickly. Same applies on their side, to get money from their client and deposit, which is massive. It's a huge, for me, it's one of the biggest. It's the number one thing in payments right now.
I agree. We see a lot of that coming through, and
of course,
Asia as well.
Of course.
But it's coming back to the regulation again.
Yeah, and we've seen a huge increase now. I mean, in terms of deposit on the offshore side from crypto, and I totally understand why. So that comes again down to us to have the right infrastructure to make sure we secure that money that comes in, because we're big amount of money, and we all know what's going on in the internet and dark web and.
All right, guys, we only have 2 minutes left, so I would like to kind of leave this if there's any questions from the audience. If you guys have any questions, to ask for the panelists. Anyone is interested? Yeah? Nothing? All right, so maybe, okay, we don't have much, maybe one chance for last questions. I think we do this maybe every year. What is one thing that keeps you up at night as a liquidity provider? Something that could happen, is that something that we can give to the audience? Andrew, maybe you go first this time. You've been complaining.
In what sense? As in?
I mean, what are the risks? What are the things that you are afraid of as a, I mean, I think, sometimes we said, the black swan events, is there something on the horizon that you guys think might happen?
Okay. What I would say is basically I would go down to more the EQ, the human resource. Because if you make your bet correctly when it comes to the risk and everything, you sleep at night. You sleep at night. Now, in our house, I believe we did our bet quite well. However, what we want to offer now, and this is something that I think we're in a good track. We increased, obviously, our employees. Now we have over 205 employees right now. So for me, it's important to create also a family, like something good, because at the end of the day, we employ these people, they have families. So I want to go down to that because we never mention all of that, which is very important for us.
Yeah, you too.
I mean, all four of you, I'm sure you guys have a lot of people under you, which we have to provide. So it's important to give a nice environment to work. And the fact that we can go around the world and it's very important. And I hope people in the business like it. And so we have more people that can help us evolve,
Yeah, fine.
A good point.
Maybe
Andreas.
quickly, just because we're running out of time.
So I would say to have all the add-on to the liquidity that basically help you to sell the product. Yeah, I mean technology, the payment solution, of course, the flexibility of signing the client, and of course all the processes in place that are flawless to acquire the client.
And stay ahead of the trend. Just to be able to sell it, you need to stay ahead of the trend and really what exactly needs to be, so what exactly needed to sell what exactly needed, not that you're willing. That's the thing.
All right. I would like to thank all our panelists. Thank you so much, guys. It's been a great discussion. And thank you guys all for attending. And thank you for Finance Magnates for organizing this. And see you next time. Thank you.
Thank you.